we inherited some tenants on the top floor.
Oh, that they were already in the building?
Correct. We bought them with the building.
Okay.
And there were 2 tenants, so they were basically kind of paying most of the mortgage for us. So that was kind of, not to go too much into mindset, but that was kind of new for us. We're like, oh my goodness, somebody's actually paying us to live here.
Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Welcome to the Best Deal Ever episode. I am joined with my good buddy, Ola Dantis. Ola, how you doing, man?
Doing great. Doing fantastic, Ken. Thank you so much for having me.
Thrilled to have you. You have an amazing accent. I just got another podcast with somebody else that also had a very cool accent. So where are you originally from?
Yeah, so I was actually born in Nigeria, West Africa, and then lived in the UK for some time. So that's kind of where the accent came from.
Very cool.
Obviously, now living in the great country of the United States.
Awesome.
Love it.
Awesome.
Yeah.
So you're in Maryland, is that right? Are you in Baltimore?
Baltimore, Maryland, correct.
Baltimore,
yeah.
Awesome. Man, you guys have not had some great press as of late, have you?
I know, it's really fascinating because, my wife and I, we live here, and then when we watch the news, and it's like, it's just not the same because Baltimore is a great city. Yes, there are some parts that aren't great, but that's kind of like everywhere with in different parts of the country.
Yeah, it's funny. The showrunner that did our show actually is right outside of Baltimore. It's amazing. The pictures he shows us, he loves it up there. I mean,
yeah.
For all these other crazy negative things, it's just like, it doesn't quite equate. I'm not really sure.
Yeah.
That's cool. So what's that market like for real estate investors?
I think it's pretty great. Of course, you have to know the market. You have to have that local purse on. You have to know the blocks. You have to know the areas. Yeah. Of course, we tend to invest pretty much in Class A, Class B areas. And those markets are great. And I think the major market driver here in Baltimore, especially in the city, is Johns Hopkins, right? That's one of the top university in the world, right?
Yep.
So we have that major driver, and that's a big market driver here in Baltimore. So so far that hospital is still there, and they keep scaling up and keep building new parts of the hospital. Oh, wow. Baltimore is looking pretty great.
Interesting. I bet you that Baltimore is probably not unlike Atlanta in terms of you've got areas that are transitioning. And so you've got from street to street, you've got sort of this wide swing of values. Is that what sort of you guys experience?
We are seeing the same exact thing. You can literally go from one block to the other and you look back to think, wow, what just happened right there? We have that same feel. And, I guess as we start to grow, the markets from the Johns Hopkins side, they're kind of pushing those boundaries constantly. So as you see those transition coming from the good to the bad, yeah, you would just keep pushing, and hopefully we're kind of getting to good for the most part in the city at least.
Interesting. I didn't realize what a driver the hospital was. I guess it's employees, and as the hospital grows.
Yes, correct. And just because of the sheer size of the hospital, people are coming in from out of state just for work, nurses, even if they're temporary nurses, right?
Oh yeah,
coming in, and then you have patients coming in from different parts of the world because it's just such a great hospital.
Interesting.
So they're having to build it out, constantly. They're buying a lot of properties too, actually.
Are they? It sounds like a tremendous opportunity for like Airbnb. If you got a lot of people coming and going.
Absolutely. We actually did that as well. My wife and I in a duplex when we were looking for a tenant. We Airbnb'd for a little bit, actually.
There you go. We've got a handful of Airbnbs in Atlanta. We love it, man. It's been fantastic for us.
Yeah. Short-term rental is a different beast, but yeah.
It is a different beast. But if you do it right, it can be very profitable too. Hey,
absolutely.
So what's your primary business model then?
So our primary business model has kind of evolved a little bit. So we kind of started with small multifamilies. We did some flips. Now we're kind of really shifting full throttle into multifamily syndication. Essentially what that means is, simple terms, we buy bigger apartment buildings with, passive investors typically, and we share in the profits.
Man. And you've been at this how long? How many years?
About 5 years, about 4 or 5 years. So, we set up our company, dwelling.com. So we kind of use that to essentially run that part of the business.
Do you do much single family? Have you?
Yes, we did. So we flipped, a few single families, and that was very interesting for us. My wife and I, we had a partner as well. So that was I learned a ton from those. We also obviously we started, with house hacking. So we did some reno on that as well. So it's been fascinating.
Very cool, man. So 5 years in and you've already graduated to, sounds like some fairly large multifamily. That's pretty amazing, dude.
Yeah. I mean, it's a lot of, I'm not going to take all the credit. It's a lot of team effort, especially when you get into the kind of commercial realm, you need a team. So, my partners and I, we've been really banging the pavement to get some deals and obviously to get some equity,
Sure.
right? You need that to take down such deals.
Are you just looking right now in your market or are you guys looking outside of Maryland?
Interestingly, we are based on our investor base, right?
Mm-hmm.
They are kind of, they really like the Texas market, essentially, right? So, when
Really?
I call folks and say, hey, we've got some deals in Baltimore, they're like, well, what's really going on there? You had the riots. I'm like, yeah, but that was a few years ago,
Right.
So it's really, perception is reality, right?
Yeah.
So, as we're getting that, we're hearing that from our investors, we're basically kind of shifting our model. So we really like the Houston, Texas market.
Yeah.
Like I told you before the show, we just closed on a 160 unit over there. So we're really kind of shifting gears into that. But we still love Baltimore. We live here. My wife and I got my family and my baby here. So we love this city.
Yeah. That's amazing. You've already closed on 160 unit in Houston. That's so cool. So, well, let's transition and talk for a minute about your best deal. It sounds like you've done a little bit of single family. You've done some multifamily. You've done some big apartments now too. What stands out as your best deal ever?
Yeah, so I think for the best deal ever, I'll probably go with the house hack that we had, right?
Cool.
So yeah. So we bought this property essentially. It was in a nice area of Baltimore City, right? It was a Class A building. We got it for $240. My wife and I did some work, so we basically moved into the bottom floor. But before we did that, we got a contractor in. I kind of managed him. And then we, took out some of the bath and the kitchen, and then took out the whole bathroom, replaced it with, typically IKEA cabinets and shower, all that kind of jazz. Paint the whole place. We moved into that bottom floor, but we inherited some tenants on the top floor.
Oh, that they were already in the building?
Correct. We bought them with the building.
Okay.
And there were two tenants, so they were basically kind of paying most of the mortgage for us. So that was kind of, not to go too much into mindset, but that was kind of new for us. We're like, oh my goodness, somebody's actually paying us to live here,
What kind of building? Was it a single family or what was it?
It was a duplex,
it was duplex.
Actually.
Gotcha.
It was a duplex, yes. So we basically did that. And then our baby came, baby girl.
Congrats.
Yeah, thank you so much. And then we moved up and then did the same exact thing. They had like this really old bathtubs. They were like steel really heavy.
Cast iron. Yeah.
Cast iron, correct. Yeah. So we took that out, put a nice shower in there, kind of did the same thing, paint, took out I think it was like a Formica countertop. We took that out and put, nice granite. I think we had a marble downstairs. So basically kind of spruced up the building.
Yeah.
So remember we bought it for $240.
Yeah.
So after we did that, 18 months in, it appraised for $375.
Amazing.
And we spent about, 40, maybe 50,000 on kind of the rehab process. So just in 18 months, we, gathered a lot of equity. And that was for us just, really exciting and fascinating for us that, oh, wow, we could actually do this.
Oh, yeah. Heck yeah. So you said you moved from the bottom level up to the top level?
Correct. Yes.
And so are you occupying the whole place or do you have somebody now in the bottom level?
So we actually got a tenant in the bottom level as well. We actually moved out of that building now. So that building is there, cash flowing like crazy. We're loving that. We're not really complaining. So we're just kind of hoping that's part of one of our retirement plans is going to go into the estate.
Heck yeah. Okay. So you bought it. Let's just break down the numbers again. You brought it for $240. You put between 40 and 50 in it. So let's say you're in it for 280, 290.
Right.
It appraised for 375. So you've got, $85,000 in equity right now. And Correct. What are you getting in terms of rents right now?
So in terms of rent, we got 1.2 on the bottom floor, 1.4 on the top floor.
1.2 on the bottom, 1.4 on the top?
Correct.
Dang, dude. That's amazing. So 2,600 coming in.
Correct.
And you're in it for about 290, you said.
Correct.
And so let's talk about what sort of financing did you put in place? How did you acquire it?
Fantastic question. So we actually got an FHA loan on this. So it was like 3.5 down.
Because you moved into it. That's the beautiful thing about a house hack. That's right.
Yes.
Oh, dude.
Yes.
So FHA, what were the terms like?
Pretty good, 3.5 down interest, 30th, obviously fixed. So we just kind of, kept on that. Nothing really fantastic there.
Yeah. No, but it is fantastic. I don't even know I don't know off the top of my head the rules. I mean, I guess do you have to live in it for a certain amount of time? I mean,
yeah. Typically you have to live in there for about a year or two.
Okay.
So obviously we've been there for more than 2 years now. So we just had to move on. Actually we moved into another another property we bought down the road. We like that area. It's a nice,
sure. Yeah. See, folks, this is the beautiful thing about a house hack is you can get FHA financing if you're going to live in the house yourself. FHA financing, you're only talking about 3.5% down.
Mm-hmm.
Your down payment is nil. Now, what did you do about repairs? Where did that money come from?
Oh, so great question. So that money was basically, it came from our savings, right? So we had some money put aside. So we're saving, because obviously when you're living in a place and you don't have to pay rent, you actually start having money because that money isn't coming in and going back out in rent. So we actually could save a lot of money, my wife and I, and we just basically infuse that and just deploy that capital into the building.
So you've got more than just your down payment into this particular building. Now, have you refinanced it and tried to pull any of that out?
Not yet. So we're gonna leave that as is for now.
Yeah.
Just to kind of keep that going. It's a pretty good deal for us. So we're really excited about it.
Hey, I will say this, man. Interest rates are at like historic lows right now. If you were going to refi, now's a great time to refi because if you can pull that equity back out, especially the money you put in, it's tax-free money. Take that money out and put it back in your next project.
Right.
You re-access that money essentially.
Right. It's the kind of the bro strategy, right?
That's right.
Yeah.
Get your money back out and do it again.
Right.
Absolutely. Right. So the other thing I would mention too, what you could have done, and folks that are listening to this on the House Hack, FHA actually has a renovation program too. I think it's called like the 203K program.
203K?
Yeah.
Correct.
So that, there was the potential on something like this, if you're house hacking it, to actually borrow the funds through FHA for the renovation as well. I mean, there's a lot of paperwork that goes with it, but we've actually done renovation for other people that were doing 203Ks before. So totally possible. Right. And again, there's nothing wrong with what you did either. If you got the cash to leave in it, or wait a little bit down the road at some point, refi and pull it back out and reuse it on your next project.
Correct.
Killer. So you're sitting on a pile of equity right now. Some of it's your own and some of it's just because you bought good. And then you've reinvested it in other projects, I'm assuming.
Yeah. So we did another flip not far from there. That was a very interesting one. Obviously have some relationships, in the marketplace. So I got a call and, basically a wholesaler. Well, they're actually builders, but they also wholesale as well. Said, hey, Ola, I've got this deal for you. You wouldn't believe it. So I went to look at the property. It was kind of like on the border between, good and bad, right?
Yep.
So we bought that property and we bought that one for $75,000. We rehabbed it. We put another 75 into it, and we sold that for about $245.
Yeah,
right.
So another $95,000 payday.
Yeah, roughly. Yeah. So that was kind of it was very interesting though. The project took longer than we thought. It was very hectic. I watched too much HGTV, and I felt like this was gonna be like a breeze through. But
can't believe those shows, man.
Yeah. No, you make it look easy, Ken.
It's only real when we do it.
Yeah, it's like it was just like I could not imagine how much work that went into that. But I was good. I was there every single day.
Wow.
I was project managing this, so it wasn't like I had a GC. It was kind of me doing it. So it was difficult than I thought.
Yeah.
It was really good learning curve for us too.
Well, it's funny. That's a common theme as well. A lot of times, these best deals, they leverage into another really good deal. Especially if you've created profit or you've created equity, you take that equity and you reinvest, and all of a sudden now there's generations of houses that are doing, that are producing profit or income because you had one really good one. It's the same thing with what you just did. That's amazing. So Let me ask you this. How has that changed your business? Doing that best deal, working that house hack, how has it changed your mindset? How has it changed your business? What are you doing differently now because of it? Oh
man. I mean, I can go on and talk about mindset forever and ever. We don't have enough time to do that. But it's kind of like, my wife and I, we were, at home one night, doing what lovers do. Cook. And I was telling my
where we going? That's
I was
awesome.
I was telling her like, hey baby, like my account keeps growing and growing. This is when we started living in the house hack. Like my account just keeps growing and growing and growing. And she was like, me too, like so, but that, and I'm just mentioning that because, prior to that, we were living in a luxury, apartment building. I never had to worry about taxes. I never had to worry about when the trash goes out. I never had to worry about parking like I did when we got the house hack in the city. But when you kind of change your life and you get a little bit uncomfortable, you start to see some real changes. And for us, just kind of getting rent, was a big one for us. We were like, oh my goodness, we have to do this like 10 times. Like we need to get more of this because that way we can buy our time back and, get financial freedom.
Yeah. Yeah. So starting with that, and that's a great way for somebody that's never done anything. I think, Brandon Turner preaches the same thing. It's start with a house hack. It's a great way to start.
Correct.
Buy a house, get conventional financing on it, rent off one side, live in the other. And then you're sort of off to the races. You start saying, man, this passive income's nice. I can get used to this. And then it sort of launches you into your rental business, right?
Correct.
That's
Correct.
awesome. Very cool. Well, Ola, man, this was a fantastic best deal ever, man. I love a house hack too, because that's unique. And the fact that you're still sitting on it, you're still, getting cash flow from it. That's very cool. I appreciate you being with us today, man. We'll talk to you soon.
Thank you so much, Ken. Thank you. I really appreciate it.
Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So, hope to see you on the next episode.